All right, guys, welcome back to Not Financial Advice. Today, we're going to be taking a look at PayPal stock, a viewer request, right after this.
You need to diversify your bonds.
The only problem you're gonna have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
We are over here on Qualtrum, and Qualtrum is a suite of software that I pay for to look at stocks. I really like it, but I'm not affiliated with Qualtrum, so I will leave a link for Qualtrum in the description below, and we can get started with some of the high-level metrics on PayPal that we see here on the top of Qualtrum. So we can see PayPal is a large cap stock. It's a $68 billion market cap company with a low forward PE of just 11. Additionally, we can see a free cash flow yield of 2%. And we can see they have $11.5 billion of cash. They have less debt than that, about $10.6 billion in debt for a net cash position of $900 million, which is great. So we are going to slide over here and take a quick peek for an update on my portfolio on the day. Today is going to be the 28th of December. What we can see here is the market was pretty flat today. Market was up 0.3%. My portfolio traded in line with that, up only 0.2% on the day. But notably, we can see that the Russell 2000 declined 0.40% today. And so recently I've been benefited with some of these smaller stocks rising, but today I was spared with some of my holdings in the more defensive sectors, large cap defensive sectors, propping me up. And so we had some good performance today. Top performer of the day was Tyson Food, up 1.61%, down to Vanguard VPU Utilities, which is up 0.75%. Some of the laggers of the day were Tesla, which I believe was some company specific news, but also some cyclicals like Wheaton Precious Metal and VDE, Vanguard's Energy Index Fund. And so that was kind of the story of the day. Some good, some bad. A boring day in the stock market, but sometimes it just be like that. If you look over the lifetime history of this company, it's been public for about 8 years, and the stock is up around 82%. So it's gained about 10% a year, which is not market beating. Obviously, there was a big run up here. So let's look at some things, in recent history that'll be relevant. So in 2018, PayPal's shares plunged after eBay split with PayPal in favor of a different provider. So that was unknown to me up until a few minutes before recording this video. So that's of note. And then in October of 2019, PayPal's surged their shares rather 8% after having a really strong quarter. What we can see here is as the market has recovered, this stock, which as you saw in the thumbnail, has been beaten down 80%, is up about 25%, but there's been some news recently worth considering. So PayPal shares jumped on October 31st of 23 after a great quarter, but we had a decline of almost 2% after Amazon dropped Venmo as a payment option. So, a lot of online providers from Amazon to eBay aren't feeling as favorably about PayPal. And so for a company that's considered to be the credit card for the internet, certainly something that, would give me pause. They also own Venmo, which we're going to talk about in a second. But because I use Visa cards through my local bank and I don't really use Venmo or PayPal, I want to make sure that we're all on the same page about what is being considered as a purchase. Investment wise. And so I just asked the simple question, what's the difference between PayPal and Visa? So PayPal is an online service that facilitates virtual payments between PayPal account holders, while Visa is a card network that connects consumers to merchants and banks. So some of the other key differences: PayPal allows users to pay friends and transfer money between accounts, whereas Visa is only used for making purchases. Also, PayPal doesn't charge a fee to send money domestically to friends and family from a PayPal balance or bank account. And then importantly, down here, not financial advice. Like the video, subscribe to the channel. We're going to move forward. And so, over on Qualtrum, we were able to see that PayPal is considered to be in the financial services, credit services sub industry. And so, I just wanted to get an idea to benchmark for our rough DCF, how much growth we can anticipate in the future. So, some different numbers we come up with here: 7.9%. 7.5%, 9.7%, 19.2%, 4.4%, and 7.5%. So we're going to be keeping all of those in mind as we work to figure out a fair value for PayPal shares. So we're going to come over here to PayPal's website, their investor relations area. Um, Great marketing department. We believe every person has the right to participate fully in the global economy. And so PayPal, um, you know, being a service that transfers funds from one PayPal account holder to the other, is also used to engage in commerce, e-commerce across international boundaries, but also maybe more so on the Venmo side between individual family members, be it domestically or internationally. And so this is a really bright, cheery photo and little line that they have there. So let's get over to their investor presentation and see if we can find anything of some more substance. I've already gone through this, so you don't have to. So if you'd like the video and subscribe to the channel, I'd sure appreciate it. But we are going to see what else we need to see to get a good understanding of how this company is performing. So this is for the most recent quarter: 11% gain in transaction growth, total payment volume up around 14%, revenue up around 8.5% in the most recent quarter, $1.1 billion of free cash flow this quarter. But there was a one-time negative thing where their free cash flow would have otherwise been 1.9 billion, which is higher than it usually is. So that's cool. 20% increase in earnings per share and an 8% increase in operating income as well. So moving forward, something here that I thought was neat. So you are able to connect your Apple Wallet with PayPal. And so that's just something that they highlight here on this screen. And so, as it stands today, my understanding is PayPal is working with companies like Visa, working with companies like Apple, working with companies like Meta, but they've been cut off from some of their partnerships with other companies like eBay and Amazon. And so it's of note. It's of note. Now, something else that they're doing that I thought was pretty cute is they've got a partnership now with Hallmark and Venmo where you can send a physical digital Hallmark card to a loved one with money attached, and I think that's actually really cool. I like that quite a bit. But you also are having the ability to send gift cards through Venmo to other PayPal or Venmo account holders. So I think that's pretty neat. And so that's them, looking to find different revenue sources. Definitely something that you want to see. Additionally, they have, I believe you have the ability to buy certain crypto coins on PayPal or on Venmo, and they're doing something in this fintech space, which I don't fully understand. But there's some level of exposure to the crypto economy, which I don't think is a bad thing. And they highlight here their partnership with Meta, basically allowing people to use PayPal to buy Facebook games. Um, and for use within Instagram and Facebook shops. And so they highlight Meta, but they don't mention eBay and Amazon. And so that's some of the useful information I was able to take out of there. So what we'll do now is we're going to take a look at PayPal over here on Qualtrum. We've gone through these high level metrics. So now let's see what we can do to figure out a fair value per share on this company. And so right now we're going to go hunting for check marks. And so about the last 10 years on revenue, this revenue chart looks really nice. They've gained 17.1% in revenue on a year on year basis. Although, what I don't prefer seeing is that in the last 5 years, they've gained 16%. In the last 2 years, they've gained 13%. And year on year, they've gained 9%, 8.5%. And so it could be said that revenue is decelerating, but I do still see moderate growth here. But I will give it a check mark with those caveats mentioned. Let's get in and take a look at free cash flow. To me, this chart looks good. Free cash flow up about 16.3% over the last 10 years. And I like seeing here their free cash flow numbers in the before times, $2.84 billion of annual free cash flow in the before times. And now in a different age, most recent 4 quarters constituting a year up to nearly 4 billion. So, um, you know, going up 60, 70% or something in 4 years on free cash flow. That's going to be a nice check mark from me. So let's move forward. Let's take a look at their cash and debt. So, cash and debt. Um, Although this is going to be a check mark, I don't like the direction that this is going. And so they've been in the habit of building up cash and having less or no debt, apparently. Um, but here in 2020 Black Swan event, their cash, started declining and their debt started rising. And so, although they currently have more cash than debt, I would like to see them take action to start paying off this debt. Um, but with those comments, we will move past this area. Let's take a look at shares outstanding. They're going down. Um, they maybe should be doing some more buybacks with this company with its price going down so much, but shares are going down. Check mark. Taking a look at ratios, first thing we'll look at is their profitability. So return on capital employed. It's sitting just a bit over 10%. Not great, not bad. It's going to be a check mark. Let's also take a look at their profit margin, sort of their bottom line profit margin. It's at 9%. Before times was at 14%. This one's actually going to be an X on their profit margin. Their bottom line margin is going down. Okay, it happens. So, lastly, what we're going to be doing is checking in on relative PE valuation. Does look like PayPal is trading at a historically low PE multiple. So I'm going to give a check mark on relative valuation here on a PE basis. Okay, so moving right along, we are now at the point in our video where we're going to be getting an idea through a rough DCF estimate of the value of PayPal's $63 stock. I'll ask you to like the video and subscribe to the channel. And now we're going to get down to the meat and potatoes of it. And so, what we've done here, as always, and this is part of the methodology, um, we've gone ahead and averaged the free cash flow over the last 5 years. And so we see that average as $3.6 billion a year in free cash flow. Numbers lifted from Qualtrum, higher cash than debt, around 11 billion in cash, around 10.4 billion dollars in debt. as of the most up-to-date recent information. Shares outstanding. And then remember what we saw, decelerating growth at 17% over the last 8 or 9 years, but decelerating 17, 15, 12, 8.5. Looking at the chart on Qualtrim for revenue growth and also where we went and just did a search for um, digital payment services CAGR. What I've done is I've projected forward 8% revenue growth for the next 5 years. Years 6 through 10, I've put at 6%, terminal multiple of 3%, and a discount rate of 10%. $63 stock, fair value estimate, $63, which means um, which means academically, shares bought today should yield you about 10% returns a year moving forward. So, overall, a really solid looking company. If you're intimately familiar with their products and you believe they have staying power, they're going to be around for a long time. A lot of their metrics and balance sheets looks really good. So thank you so much to my subscriber for sending this request over. As always, if you have another stock that you'd like for me to look at, any one of you, feel free to drop its ticker symbol in the comment below. Make sure to like the video and subscribe on the way out. This is not financial advice, and I will see you on the next one. Thanks. Bye.